Every AI chip needs to talk to another one, thousands of them constantly. And the company that solved that problem just became my sixth pick in the $1,000 portfolio challenge. This is CRDO, Credo Technology. Quick reminder before we start, everything here is for education and entertainment, not financial advice. This is my own real money experiment. I'm not a licensed advisor. Don't buy or sell anything just because I did. Do your own research or talk to a licensed professional before making any investment decisions. Let's find out why Credo cleared the screen. Throughout this video, I mispronounced the company name Credo. The correct pronunciation is Credo. My apologies to the company and the staff of Credo. Picture an AI data center. Not one computer, tens of thousands of them, working together as a single machine. For that machine to work, every chip has to talk to every other chip, constantly, instantly, without failure. That connection is called an interconnect, and for years nobody thought about it. The chips got the attention, the wiring was an afterthought. Then AI clusters got bigger, and the wiring became the bottleneck. A drop connection between two GPUs can stall an entire training run. Millions of dollars in compute time gone in an instant. That is the problem Credo Technology was built to solve. Credo's core product is a cable, but not an ordinary one. It's called an active electrical cable, an AEC. A normal copper cable loses signal over distance. That's why data centers move to optical cables, light instead of electricity. Optical is fast, but it's also expensive, power hungry, and prone to failure. Credo's answer was to put a smart chip inside a copper cable. That chip cleans up the signal as it travels. The result? Copper that performs like optical without optical's downsides. Up to 1,000 times more reliable than the optical connections it replaces. Roughly half the power draw. That combination is why Credo's cables have become standard equipment inside some of the largest AI clusters in the world. Here is what makes this hard to copy. Credo doesn't just make the cable, they own the chip inside it too. The core technology is called SerDes, short for serializer, deserializer. It's the part that converts data into signal, sends it, and converts it back. Most companies buy this technology from someone else and build around it. Credo designed their own in-house from the ground up. That means they control the chip, the cable, and the system it plugs into. Every layer, one company. That's a slower path to build, but once it's built, it's a hard position to attack. A competitor can't just license a better chip and catch up. They'd have to rebuild the entire stack. Credo is not alone in this space. Three names come up again and again: Broadcom, Marvell, and Astera Labs. Broadcom and Marvell are giants, massive diversified semiconductor companies. Connectivity is one piece of a much bigger business for them. Astera Labs is closer to Credo's size, a newer, faster-growing rival focused specifically on connectivity. The difference is focus. Broadcom and Marvell sell semiconductors broadly. Connectivity is one piece that ties their chips together. Credo and Astera Labs do almost nothing else. That focus is a double-edged sword. It means faster innovation in their one lane. It also means less room for error if that lane slows down. Analysts covering the space note that Credo currently trades at a lower valuation multiple than Astera Labs, even with a comparable growth rate. Whether that gap closes or whether it reflects a real difference in risk is exactly the kind of question this methodology is built to keep asking, not answer with certainty. Now the numbers. Credo's most recent reported quarter showed revenue growth north of 200% year over year. That is not a typo. That is the pace this company has been growing at. Gross margins sit near 68%, net margins near 50%. That's a company converting growth into actual profit, not just chasing revenue. And Credo isn't standing still on the product side either. They're expanding beyond the AEC cable into optical chips called DSPs. into a new product category called active linear cables, into PCIe retimers, a market that barely existed for them 2 years ago. Each new category widens the total market they're selling into. They've also moved into silicon photonics through acquisition, positioning the company on both sides of a coming shift in how these connections get made. The bet, in plain terms, as AI clusters keep getting bigger, the need for reliable connections grows right alongside them. Credo sits in the middle of that growth, selling the plumbing nobody sees but everybody needs. No stock is a sure thing, and Credo has a real risk sitting at the center of its story. A small number of customers make up a large share of Credo's revenue. Reports place the concentration extremely high, a majority of quarterly revenue tied to just one or two large customers. If one of those customers slows spending, builds the technology in-house, or shifts to a competitor, the impact on Credo's revenue would show up fast. That's not a hidden risk. It's disclosed and it's discussed openly by the company and by analysts covering the stock. There is also a geographic risk. Manufacturing partners located in Taiwan expose the business to broader trade and supply chain tensions. And there's a valuation risk. Growth this fast tends to come with a premium price tag. If growth slows, the premium can compress quickly. None of this disqualifies the stock. Every pick in the challenge gets the same $100 regardless how it scores. The risk management isn't in the sizing of any one pick. That's the whole reason this challenge only ever risks a small slice of one's total assets, small enough that you shouldn't worry about it wherever it goes. At the top of the company is Bill Brennan, CEO. Under his leadership, Credo has repeated one idea publicly, quarter after quarter. Build the whole system, not just one part of it. That system-level approach shows up everywhere in this company. In the chip design, in the cable, in how new product lines get added. It's not a slogan, it's the actual operating strategy, and the results so far back it up. So why did Credo clear the screen for this challenge? Smart score, analyst consensus, and price target upside all line up on the lens one side. Fundamentals held up on lens two. No red flags on financial health or growth. That doesn't mean this stock goes up from here. Nobody can promise that. Not me, not any analyst. What it means is the pick followed the process. Same process every single time. That's Credo, pick number 6. Here is where the whole portfolio stands right now. NVIDIA, Zeta Global, Broadcom, Devon Energy, ASML, and now Credo. 6 positions in, 4 more slots to fill. $400 still sitting in cash, waiting for the next pick to clear the screen. Whether this one gains or loses, it's a learning point for everyone following along. One more thing before I go. If all of this feels like more than you want to take on, there is a simpler path. Just buy an S&P 500 or a Nasdaq 100 ETF and let it run. Do that monthly and your investment grows without you having to think so much about it. Stock picking is more like a sport. There is excitement in it. There's also luck in it. If you do it, only use a small portion of your total assets, small enough that you don't lose sleep over it. Have a good day.